Hey everybody, I want to do just a quick little in-depth breakdown on gold here. I went over it in the last market update video, but I think it's worth going over a little more depth. So first of all, we got to go out to our weekly chart and look to see what exactly it was that is happening here in gold. So from from this high, all-time high, to this low, which is the consolidation period that we were trapped in for years, since 2010. So, it do us good to just kind of dictate a nice little trend line there. This was our breakout point this summer. And now we're trading well above the breakout point. So what is worth noting is this 61.8 level. The 61.8 level is where we got rejected during the whole Iran bombing fiasco that happened last week, and we had us a nice little false breakout here. So now I teach this in my group, in my VIP group, that a false breakout typically leads to a breakdown, and that's where we are now. So you can see these candles. This is a weekly chart here. I'm going to go closer, but we have this nice doji here, and now we're starting to carve out our first bearish candle here. Of course, it's only Monday, so let's see how this pans out. But right now we're looking pretty bearish, and so here's the bull flag that we were trading in from August of 2019 to around Christmas when we broke out. And we had this huge monster breakout, and this gap right here was the start of the Iranian conflict. This was the climax of it, and then we hit this 61.8 level and was rejected. And now we're in a false breakout situation, and we're starting to move lower. So the big thing here is that we can't rule out that we make another push higher. A lot of times we'll see, especially with the RSI starting, in this overbought territory, there's still some upwards momentum here, and it's entirely possible, especially geopolitically with the news, that we would get some sort of move higher like this, while the RSI remains divergent, and then we would get our move to the downside after. This is a complete possibility, but we're at a conjunction now that this is super important, this level that we're at. And this is what I think is most likely, and we're in the midst of. So from the low here, which is the low of the bull flag, to the top of this false breakout is our next Fibonacci retracement. So we went from this low to this high, and now we are trading right at the 38.2% extension, which comes in right at 1548. And so you can see we're really bouncing along this 1548 level, and we need to get a clear break of this. And we are so close. We tried on Friday. We did it multiple times. I thought we were gonna break down, but we didn't. So once this breaks down here, then it's a bit of a clear move to the 61.8 of the bottom of the bull flag to the false breakout. And we can make a downtrend line. We have this one here if we wanted to zone it off. We also have kind of this looking one here. Now the risk is that we break to the upside, right? So if we break out above there, then you can be on the lookout for a rally. But I really am looking for us to break down and then retest this 1510 level, which is the 61.8, and potentially, which would create a great buying opportunity, because I do think fundamentally this year in 2020 we're going much higher. But that would take us to the 1510 level. but we could even push lower down here to retest this retest the backside of this flag, which would put us down at 1460. So that would be a mega drop, but it would create some great positioning for us to get long again way down here, and that would mean another because we have our higher high here. That would make a lower high, and then we can make another push upwards. So gold looks to be in like a healthy correction to the downside, and we'll see if this 1458 level can hold. We get down around 1456, and it's going to be really great area for some shorts. So hope you found this video helpful. Click on the links below for more information, and I will see you in my chat room. All right, everybody. Peace.